Good morning, everybody. Welcome back to another market open. Today is Monday, February 5th, 8:46 a.m. And we are here, folks, for another show, another day, another market open. Today's a very interesting day. We obviously have Palantir earnings, which are going to be pretty exciting to see what ends up happening. I'll be live at 3:30 p.m. Eastern Standard Time, and that's going to be a big earnings for a variety of reasons. I'll talk a bit about my expectations for Palantir earnings. Obviously, last night, for those that we're in the stream around 8:30 p.m. We went from 8:30 to 10 for about 90 minutes. And I broke down all of my ideas, thoughts, pontifications around the world of what we're going to see on Palantir. So I'll do some high-level overview thoughts today. We got to talk about JPOW. He was on 60 Minutes yesterday on CBS, and he had some, I think, very bullish things to say. I mean, some people are interpreting it as hawkish, but he didn't really say anything that was different from the last FOMC meeting. But he did expand on things that gave a bit of clarity into what he's thinking about, that I feel it makes 2024 seem like it's going to be a good year, even if we do have a bit of a pullback, because we've got the market at all-time highs. And then we got to talk about Nvidia. Nvidia right now is up 3% in the pre-markets. Nvidia's at 600. I mean, if you guys saw the thumbnail, $682. It's up 20 points in the pre-markets. It's closing in on 700. Goldman Sachs raised their price target today from $625 to $800 a share. I have a lot of ideas for why Nvidia is going up, but honestly, a lot of those ideas boil down to the fact that AI is real, models need to be trained, and Nvidia has a pseudo monopoly on being able to train those models, and they have software-like margins. And as a result of that, the market likes the stock, and the stock continues to go higher, which I think also signals something good for a lot of these other software plays. So we got a lot to get into. Monday, February 5th. Hopefully everyone had a good weekend. And let's get into it. Gift Magic, Top Dasher, Prado Man, Luke Francis, I Show Sad, Ray, Adrian, Dale, Valero. Hello, Amit, and everyone. Big day today indeed. Franz Baker, Trucker Rob, good morning from Nebraska. Good morning. Thank you for being here. Win, Vishal, Theo, Rachel, Dax, Rick, Ray. Hey, Amit, how's the weight loss? I'm down 7 out of my goal of 21 pounds. Funny you bring that up. I didn't want to say it because I don't want to be that guy. But you're the one who asked about weight loss, so I guess I'm going to have to be, in all honesty, that guy. Your boy is down 6 pounds. We're at the 155 strike on the puts. Remember, those puts expire at the end of February. We're trying to get to 145 strikes, starting from 162. So that's actually close to about 7 pounds where we're at right now. So we're going to hit those 145 strikes by the end of February. That's just what's going to happen. You know, we're at 155 right now. Again, I didn't want to be the guy, but you asked the question, so I got to be the guy. I actually just got back from the gym an hour ago. So we're hitting the gym, folks. We're doing what we got to do. Jittery Hobo, Power Napster, Danny, Steve, Tony, Benny, Mike, Ty Gordon, Bhaskar, Altal, Ralph, Joseph Egas, Benny, Justin, Brian. Thank you all for being here. All right, let's get into it. I think we'll start off with JPOW. Let's start off with JPOW, then we'll move on to Palantir and then go to Nvidia. JPOW had a lot of interesting things to say, and I think it's pretty important to discuss some of the stuff he had to say, because the market's actually kind of down in the pre-markets because of what JPOW had to say. But ultimately, I think he didn't say anything that was that crazy. I think he actually said stuff that was pretty bullish in the context of what he thinks about rate hikes and where he believes the overall market is going. So I have a transcript right here. I'm going to pull up. I pulled up the best parts of the transcript. Someone said you used the bathroom. That's why you're down this morning. No, bro. I was in the sauna for 21 minutes, dude. Like, dude, the sauna today was tough at my gym. It was a tough, but because by 15 minutes, my headphones died and I had nothing. And in those final 6 minutes, because I needed to do 21 minutes, and I was like, I'm not gonna leave until it's 21. I think the temperature was like 180 or 200 degrees Fahrenheit or something. And in those final 6 minutes, when you don't have any music or any podcasts or anything, you're kind of just, it's like you against the world. You know, and so I stuck through it, and so that's why we have a nice little scale reduction today versus just using the bathroom. All right, so here's what JPOW had to say. Here is what JPOW had to say yesterday on 60 Minutes. A couple things that I want to point out. So, what the interviewer asked: "You've avoided a recession. Why not cut the rates right now?" JPOW says, "Well, we have a strong economy. Growth is going on at a solid pace. The labor market is strong. 3.7% unemployment." He's correct about that. Labor market is, quite frankly, unbelievably strong. We added, well beyond the 225,000 job target we had last quarter at 335,000 last week. I mean, just absolutely insane. The JOLTS report is great. So, and inflation is coming down. With the economy strong like that, we feel like we can approach the question of when to begin to reduce interest rates carefully, which makes sense. If you've got a ton of unemployment and inflation is coming down, you don't have to be aggressive to cutting rates. And we want to see more evidence that inflation is moving sustainably down to 2%. We have some confidence in that. Our confidence is rising. We just want more confidence before we take that very important step of beginning to cut interest rates. Then the interviewer asks him, okay, so what type of data do you really need to see to be able to finally make the decision to cut rates? Powell says, basically, we want to see more good data. It's not that the data aren't good enough. It's that there's really 6 months of data. We just want to see more good data along those lines. It doesn't need to be better than what we've seen or even as good. It just needs to be good. This right here, this sentence is very important. It doesn't need to be better than what we've seen or even as good. It just needs to be good. Meaning they're not asking for like massive levels of decreasing in inflation. They're just asking for a substantial enough of a reduction that it continues to show the trend is moving downward, which in the context of inflation is all you really need to eventually lower those rates. And so we do expect to see that. And that's why almost every single person on the FOMC believes that it will be appropriate for us to reduce interest rates this year. So in the context of interest rates, JPOW was very bullish. Some people said this was hawkish because he said it's likely not going to happen by March. That is not hawkish to me. Him saying, hey, in the next 7 weeks, we're not going to get rate cuts is not hawkish at all. It's just like he's being honest. In the next 7 weeks, we are not going to see inflation data that is so substantive that we are going to get a ton of rate cuts. So in the context of what he's saying about rate cuts, I don't think it's hawkish at all. I think he's saying, look, once we get the data, we're going to aggressively cut. He doesn't say aggressively. I'm interpreting that it's aggressively because at some point, if you get to 2.4%, 2.3%, you can't have interest rates at 5.5%. It's going to trigger a recession. So I think they will aggressively cut, or at least 4 25 basis points cuts. But it's going to take probably 4 to 5 months for that to happen. Okay, then we get to something really interesting. The interviewer says, we're not going to see bank failures across the country as we did in 2008, are we? And JPOW says, I don't think there's much of a risk of a repeat of 2008. I also think, we need to be careful about making proclamations about particularly the future. Things have surprised us a lot, but no, on this, I do think it's a manageable problem. I think we're going to manage it. There will be some banks that have to be closed or merge out of existence because of this. That'll be some smaller banks, I suspect, for the most part. These are losses. It's a secular change in the use of downtown real estate, and the result will be losses for the owners and for the lenders, but it should be manageable. He's talking about particular smaller regional banks that have very concentrated exposure to commercial real estate. And the far majority of regional banks have some exposure to commercial real estate, but there are only a few that have very, concentrated exposure to it. And as a result of that, that's why he thinks we're not going to have a repeat of 2008. This, to me, is a really good sign for the market. I mean, at the end of the day, you've got New York Community Bank, which had a pretty aggressive decline the other day, 34% last week. Right now, the stock actually rebounded last week. Yeah, stock's up 5% from where it declined last week, which is not a lot, but still, it doesn't mean that bank's going out of business. And they have particularly some lending issues with apartments and rents and defaults, and that's why they ended up collapsing. The market expected 290 million of profit. They showed a 290 million loss, so that was a big issue. But JPOW doesn't believe this is a contagion that is going to spread across the entire banking sector, especially when rates come down. I think if you are a holder of regional banks like myself, I hold TFC, very big position in that company, or KRE, XLF, JP Morgan, Bank of America, all of these banks are going to have, in my opinion, a tremendous rebound towards the end of 2024 once those rates get cut. Because even if we get at the lowest estimate 50 basis points of cuts, again, the losses on those books, which are approaching a couple $100 billion if you take out all the banks in aggregate, they're going to start to come down as the delta between where they issued those rates and the actual Fed's funds rate comes down as well. And so once we see that happen, these banks are going to do fine. And the only risk to owning regionals right now is there a 2008 type of crash coming where, Lehman Brothers and all these other banks all across America start failing. And these are like sophisticated banks. They're not just your small Silicon Valley. Silicon Valley was sophisticated, but it wasn't, Bank of America collapsing. And JPOW doesn't think that's going to happen, which is exciting to me. I think that it's good that we see that, JPOW's confident on the fact that that's probably not going to happen. And if that's the case, we are going to be, in a good situation. Final thing I just want to say from the transcript, in the context of China, someone says, what is your response to the Chinese real estate market that has fallen off a cliff? Obviously, Evergrande went bankrupt the other day or officially got liquidated. And we're seeing the Chinese index right now down pretty massively in just for starting from last night. China had a variety of new restrictions they put on the economy, and we saw some losses there. So we'll talk about that in a bit. But JPOW says China's economy is meeting some challenges right now, obviously, and growth has slowed. They've got away from a market-led growth model. It's more about state-owned enterprises now, and it's still too much associated with real estate investments and things like that. And you're seeing issues around commercial real estate. So the question is, how much does that matter for the United States? He says, we have our economic relations with China that are important, but they mostly consist of our Chinese manufactured product. So our financial system is not deeply intertwined with theirs. So in the context of China, he's basically saying, look, like Apple's going to have some issues because of he's not saying Apple, but he's implying that their supply chain might suffer. But the broader financial sector in terms of the banking infrastructure of the United States, that's not really intertwined with China. It is to an extent, but not to such an extent that if China collapses, the US would collapse. If anything, if China collapses, they would be exporting massive amounts of disinflation across the entire world. The US obviously being a big importer of Chinese goods, those goods would start to come down in prices, and we would have deflation. Like the water bottle that that Walmart imports from China for $5 a bottle, and they sell for 15. They would be getting those at $2-3. And so consumers would have to pay substantially less, and that would just be great for our overall economy. And then rate cuts would really have to happen. So he says our economic production systems are not deeply intertwined with theirs. So as long as what happens in China doesn't lead to significant disruptions in the economy of the financial system, then the United States implications, we will feel them, but they won't be that large. So JPOW's bullish. JPOW's pretty bullish on what's going on in the economy. At least that's how I interpret it. And I think that means that as long as we survive the next 6 months with good inflation data, rates will come down and we'll be okay, even if we're at all-time highs right now. 30% of China stocks are halted. That is correct. That's how crazy last night was. I mean, 30% of China stocks halted is just absolutely insane. But that is why the Chinese economy is not necessarily the best to invest in. Everyone's like, oh, I want to buy the Alibaba dip. I'm like, dude, there's so many companies in America to buy the dip on, even in all-time highs in the stock market. I don't know if Alibaba is the best one to be getting. And granted, I think Alibaba will do well. I really do, because the valuation is just stupid. But still, it's like when you see stuff like this, you kind of don't want to take that risk. Alex Poo says, how tall are you, Amit? I'm 6 inches and I'm trying to gain body weight currently at 155 pounds. So I'm 5'7" and I'm at 155. Being 6 feet and 155 seems like you're really, you said I'm trying to gain weight badly. Yeah, I think you need to gain weight badly. 155 at 6 feet. Dude, you must be like a toothpick. Like I'm 155 at 5'7". I couldn't imagine being 5 inches taller and at this weight. I'm trying to get to 145. I think now 155 is not bad for being 5'7", 5'8". It's actually quite reasonable. It gives me a bit of a belly, and I don't want a belly. I want a freaking six pack, dude. I saw this guy at the sauna on Friday, and he had a six pack, and he was wearing this like silver chain, and he just looked so cool. And I was just like, you know what? The way he was walking, he acted like he owned the gym, and I was like, that guy's too cocky. I need to get to his level. Like he was walking like he had a certain level of cockiness. I was like, you know what? If that's what a six pack does to you and a silver chain, then damn it, by the end of this year, I'm going to start walking like that. So we're going to get there. Okay. Let's talk about, we did JPOW. Let's do Apple. Let's do Apple before we go to Palantir. In terms of how will this China issue affect Tesla? Look, Tesla has a lot of headwinds coming up for it. Real quick on this, Tesla did increase prices of one of their vehicles yesterday. I don't know if it's necessarily bullish. It's definitely not. It could be interpreted as bearish in a couple of different ways. And we'll talk about Tesla. Yeah, let me leave the Tesla segment for a second because the Wall Street Journal also had a piece on him. So we'll talk about Tesla in a second. Let's do Apple first, and then we'll do Tesla, then Palantir. Okay, Apple. The Vision Pro is out, and I actually called Apple to try to see what the financing options were on a Vision Pro because I wanted to just learn a little bit about it and see, maybe is it worth potentially picking one up just to play with it and work with it. And they were offering 48 months of financing, so 4 years to pay off this $4,000. And at that moment, I really asked myself, that's pretty cheap in terms of a monthly payment, but what's the point of financing something? Forget even for 4 years, for 12 months, if they're going to release the next version very soon. And immediately I was like, wait a second, this doesn't make any sense because we know the next version is coming. We know it's going to be lighter. The battery pack's going to be better, all that stuff. So it really doesn't make any sense to finance something. If you don't have the 4K to drop on a Vision Pro, which I don't think I have the 4K to drop. I mean, could I put 4K into a Vision Pro? Yes. Do I really want to? Absolutely not. So if you really aren't comfortable dropping 4K, why would you pay for it if, a better version is going to come out? And so I started watching some reviews on YouTube, and I'm not going to lie. The reviews did get me excited for the future of spatial computing, what it looks like, where spatial computing is ultimately going to go. However, the other reviews I've seen are that the thing is just heavy. The battery life sucks. And there's a lot of initial bugs similar to the iWatch when it came out 7 years ago and similar to the iPhone when it came out in 2007 that will be fixed eventually. I mean, that stuff will get sorted out. but there's no reason to be the guinea pig for this unless you have a decent amount of cash and you just don't care about $4,000 because you are a guinea pig. You're going to be testing all the bugs. You're going to be giving all the feedback. You're not going to be really getting the best product. Here's some videos of what it looks like. I mean, as you can see, there are people quite literally walking around. It's actually really good marketing when you're walking around with this thing. You see what this guy's doing. He's like basically he's interacting with his world via this Vision Pro in an augmented reality. It's not really virtual reality. It's augmenting your own reality. And I thought this was the biggest kind of takeaway that I got from what's happening right here, which is that someone is in the real world. There's been countless videos of people on the subway playing with this thing. And the real world becomes a workspace. The real world becomes, how they're consuming YouTube or anything like that. And it really did open up my eyes to the fact that spatial computing does make sense as a concept and that there is probably a market opportunity for it. Because instead of going on, your phone and answering the email, you're literally just looking into something and you are quite literally typing into air, into oxygen, and you're using oxygen to be productive. Which is a cool sci-fi reality. It seems interesting. Like it's not something to poo-poo on. It's not something to say, oh, that's like, super weird or cringe or anything like that. I think it's actually really cool to use the very nature of air and turn it into productivity and something that you can use. Just like a little box, became something that has all this mega superpower. What if the very fabric of your existence in terms of the way you interact with space also becomes like that? However, it does look kind of weird just being in the subway, magically playing with the air. Now, it's not like that's a bad thing or anything. And I know people said that in 2007, like, oh, you're playing on this little box on this touchscreen. But I do think in the context of real world interactions with people, it decreases some of those real world interactions. It definitely, I think there is a little bit of a safety concern in the context of how people want to be using this with their Vision Pro, especially this video. I'm pretty sure people have seen this video, but this video has gone super viral. Someone's on their Vision Pro. And as you can see right here, this person is using the autopilot on the Cybertruck and they're interacting with the Vision Pro. Now, is this worse than being on your phone in a Cybertruck? I don't know how much worse it is. Maybe it is a little bit worse. Maybe it's the same. But the point is, if we get full FSD, this will be okay. I don't think we have full FSD yet. And even if we do have full FSD, this is probably not the thing you necessarily want to do. Nonetheless, what does it mean in the context of business and investors and how you should be thinking about it? First of all, Meta should be feeling very happy. On the day, think about this, on the day that the Vision Pro came out, on Friday, Meta stock added $210 billion of market capitalization. They have one of the best AI advertising businesses that is not reliant on search. So they don't have the sort of overhang of the narrative that Google search is dying and therefore, the street is scared about what's going to happen with search. They issued a dividend. They have so much cash, they don't know what to do with it other than give it back to shareholders. The Meta Quest is selling very well. Even it's selling way more than the Vision Pro right now. Maybe the Vision Pro wins in the long term, but Meta Quest is doing very well. And on the day Tim Cook releases what I believe will be his legacy-defining product, Zuck's puts up $40 billion in ad revenue and is out of the shackles of Tim Cook's grasp on his advertising ecosystem. Remember, 4 years ago, Tim Cook basically with the iOS 14.5 update said, Zucks, he wasn't targeting Zucks, but it kind of felt personal. He doesn't like Facebook. He doesn't like Meta. He doesn't like what they're doing with privacy, all this stuff. And he basically said, you're not going to be able to target consumers the way you want to because people are going to have to ask to opt in, yada, yada, yada. And Zuck said, okay, we're just going to use AI and we're going to be one of the best advertising machines in the world. We don't care if you opt in or not. We're going to know everything about you and we're going to target you with these ads and you're going to click on these ads and you're going to make Facebook shareholders a ton of money. The stock is up almost 500% from the lows at $88 back in November 2022. I mean, whether you like Zucks or not, it is just one of the most incredible performances of a company. The company lost 75% of their value when they went up to $1 trillion back in 2021. And now they're up 500% from those lows. Just absolutely incredible. So the reason I bring that up is because the Vision Pro is only expected to bring in about $4 billion of revenue over the next couple of years for Apple. It's not moving the needle. I was listening to the Apple earnings call before I got on the live. I haven't finished it yet, but I was listening to I was like 15 minutes into the Q&A section. And the biggest questions were like, how are you guys going to expand margins in the context of services and installed devices? And the answers were pretty lackluster. I mean, the answers from the CFO and Tim Cook were just like, we're growing, we're building our operations, and we're expanding and yada yada. It was like very corporate talk. There was no real substance or juice. And it's because I don't think they really have the substance or juice. Yes, because the Vision Pro 2, 3, or 4 might be the Ray-Ban type of glasses, these type of glasses where I can interact with my augmented reality without having to look like I'm going skiing. But as of now, it's not there yet. And so until we get there, I do think the Vision Pro is not going to move the needle on Apple stock. Apple right now, where is it at in the pre-markets? Apple is up 0.70%, 187. Is this a dip to buy on its way to 250? I don't really know. At a 30 PE, they made $2 billion more than they did last year, 117 to 119 billion. We saw in those earnings. I just don't know. I think the Vision Pro 2, the Vision Pro has potential. Don't get me wrong. I watched the reviews. I think there's massive potential. But in this form factor, it is not going to be, the next iPhone. And the question is, do you have faith in Apple to get it to the form factor where it becomes the next iPhone? I think 99 out of 100 people would say yes, because they've done it time and time and time and time again. The problem is we just don't know. It's a whole different computing world. And is it that actually going to take off with consumers to the point where they want to use it every day? Maybe, maybe not. But I think that story will have to play out over the next few years. Okay, cool. So that was our talk on Apple. I think we'll do Palantir right now. Let's get into Palantir preview, and then we'll get into Tesla, and then we got the market open in 23 minutes. Thank you all for being with me here today. Palantir. All right. So last night I talked a lot about all the things going on in the world of Palantir and what I'm expecting. I will reiterate my thoughts. You guys probably know what I have to say. We'll do about 5-6 minutes on this, and then we'll move on. Guidance is going to be the determining factor. If we guide at 22%, we're going to be putting in about 2.7 billion in revenue for 2024, fiscal year 2024. So if we bring in revenue of 21.5%, call it 21.5 to 22% year-over-year growth, that's 2.7 billion. So when you get the earnings release, honestly, the first thing I'm going to is the bottom to see that guidance, because I've been saying this for the past couple of weeks now. We need that guidance, right? We really need that guidance to come in well. Pat says S&P update. We don't know when they're going to be including the S&P 500. I would imagine by mid-2024. They meet all the requirements, so nothing's going to happen. They will be in it this year, but the committee is just going to have to decide, whenever they decide. So probably mid-2024. So the guidance is going to be the most important thing. I mean, look, we don't have to like red hot to be frank about the idea that if they don't give us really good guidance, the stock's not going to do well. The stock's going to be in a tough situation because ultimately the market's not going to be able to justify some of these multiples. Here is a good post by our friend Matt here, who lays out some of his expectations going into Palantir. So what he expects for Q4 is 605 million, 19% year-over-year growth. I think that's probably going to happen. Maybe we get to 610, 615. And like maybe Palantir inches up to that 20%, but 605 is more likely. Adjusted operating margin, 31%. This would be up from 29%, which wouldn't be too bad at all. 29 to 31%. Total customers, 525. So he has customers going from 453 to 525, which would be almost 75, 80 customers roundabout that we're getting. And commercial customers would be 390. That's up 50% year over year. He's hoping for 400 customers. I am skeptical on this 525 number. And that's just me becoming very conservative. And I should be more bullish about this because Palantir is a growth company and they're amazing and all this stuff, and they should be getting all these customers. But it's one of those things where I check myself on the delusional aspect versus the hyper bullish aspect, because we had 453 last quarter. If we get even to 500, I will be ecstatic, because that means the growth trajectory went from 8% for the past 2 quarters to up to 10%, which is great, right? At least it's accelerating. If we get to 525, I mean, that basically means that for the quarter, that's going to be 15. That's 16% quarter over quarter customer growth. That's doubling the customer growth rate percent as a percentage of growth, which was 8% for the past 2 quarters. If we pull in at 16%, which is what 525 customers implies, that is going to be phenomenal. I don't know if we're getting there. If we get there, we get there. I mean, look, if we get there, if we get there and we get a dip, that is when you have to consider selling some things and realizing what's happening with Palantir. But I don't think we'll get a dip if we actually put up these numbers, because the revenue will ultimately affect that. I'm expecting around 490. I mean, being conservative, that's my estimate. But if we get anywhere above 500, I am going to be ecstatic. That would be great. Now, his estimates for full year 2024, which I think are reasonable, are 21.5% year-over-year growth. That'll be 2.7 billion. We're going to probably do 2.22 billion this year. Cash is going to grow closer to $4 billion bucks. Net income around 375 million. That would be pure GAAP profitability, 14% net margin on top of revenue. And then adjusted net income will be about 850 million. That would be 31.5%. If we can get that number to, maybe 900 to 950 million, hopefully get that to 32%. That would be a very good estimate for full year 2024. What's going to happen? I don't know. I think it's going to be a good earnings. But then again, this is a game that's very, very hard to win. It's a very humbling game. This is what I said on Twitter and on the stream last night, which is that we are investing in an individual equity because we see that we are seeking more alpha from that equity than something like a Google or a Microsoft. Ironically, the NASDAQ 100, the Qs have performed way better than a lot. I mean, Palantir tripled last year, but the NASDAQ still 54% is not bad given the amount of risk you took investing in Palantir versus investing in the Qs. They've done very well. I think we're getting to a point, though, where now you start asking yourself a question, and maybe this is a premature question to ask. Maybe this is a question that we should be asking. But the question is, how much more room do these guys have? Microsoft at $3 trillion, Apple at $3 trillion, Meta at $1.2 trillion, Nvidia now, closing in on $1.7 trillion, Amazon at $1.9 trillion. I mean, at what point does this get to like, hey, we need to have a breather versus, no, this is one of the greatest tech bull markets we've ever seen, coming off from printing $7 trillion in 2021, and we only have room to go higher. I don't know the answer to that question, and quite frankly, I think the smartest fund managers in the world don't have an answer to that question. And as a result of that, this is why it's a little bit in an iffy place in terms of where should we be allocating our capital. Now, in the context of Palantir, the reason I just mentioned all those big tech names is because Palantir is $30 billion. Microsoft's at $3 trillion. And they're kind of in the same space when it comes to AI, even though Microsoft's a much more sophisticated and differentiated business. But AI is what's driving the market momentum and the even growth multiple we're getting right now for a variety of these businesses, much less Snowflake, Datadog, but definitely Palantir and Microsoft. So if Palantir can tap into the market opportunity that is AI from a headline growth perspective and then from an investor sentiment perspective, and I think they figured out the latter. I'm interested. You guys are interested. There's channels covering Palantir every day. There's news outlets talking about Palantir. Like, we are interested for a reason. Now, if they can just give us the numbers, if they can give us the damn numbers that justifies our interest in their company, we're going to have a phenomenal earnings, in my opinion. Even if the stock sells off in the next 5 days, right? Like, we will have a phenomenal earnings if the numbers can justify the amount of attention Palantir is a stock that has 60 million shares traded every single day. This is a stock people actually really care about. Institution, and it's not just a meme stock anymore because they're GAAP profitable. They're gonna pull up $600 million this quarter in revenue. I mean, C3 AI is gonna maybe do $600 million for the year in terms of full revenue. So like this is not a company that's a joke anymore. This is a company that is transforming the entire UK's healthcare system. This is a real deal. If you're invested in Palantir, I believe you're invested in one of the most interesting and innovative companies on the planet. But the numbers have to be there so that we can stop just being interested and start seeing the numbers to justify your interest. And so I think, if we can get 21% year-over-year growth, I will be ecstatic. If it gets anywhere above that, I will be hyper ecstatic. If we get 25%, you're going to hear me on the stream. I will be, you will see a different Amit if we get 25% year-over-year growth. If we, I will be as excited as a Taylor Swift fan yesterday that saw Taylor win the Grammys. I saw this video of one of my friends on Twitter. She's a big Taylor Swift fan, and Taylor won the Grammys for Album of the Year. And let's just say my friend had a particular reaction. I would have a certain type of reaction if we pull up 25% year-over-year growth. I mean, that means we're going to do close to $3 billion in revenue next year. It's going to be insane. So if that happens, that'd be awesome. If it doesn't happen, it is what it is. But 21% to me is like the core number. That's really the only number I care about. And if that happens, then we're going to have a fun earnings. All right, we've got about 15 minutes until the market open. Thank you, everybody, for being here. Let's talk about Nvidia. Nvidia just continues to keep going up. And the reason it keeps going up, let's have someone else explain it rather than myself. Let's have Mr. Stanley Druckenmiller, who has had Nvidia as his top holding for a while now, and have him give his thoughts. I think this is from about a year ago when he did this interview, if I'm not wrong. But this is what he had to say about why Nvidia is continuing to go higher.
You look at the AI kind of boom here. Are there lessons to be learned from the .com bubble?
Yeah, there are definitely lessons to be learned. Don't get emotional, don't get crazy. But I will say this about the AI. Nvidia bottomed in October in the low 100s. It's true it's 380 or 390, it's in nosebleed territory. If this is a secular move, if this thing is real, you just don't have 10-month moves. That's not how it works. Even the dot-com bubble lasted 2.5 years. For many of the guts of the internet, it lasted 4 years. The Cisco's, the Sun Micros. So could Nvidia go down materially in the short term from any point? Yes, but I would be surprised if I'm right on AI and the impact on it. I mean, it's already making the top coders 7 to 8 times more productive than they were 5 months ago. If it's as big as I think it is, Nvidia is something we're going to want to own for at least 2 or 3 years, not for 10 months, and maybe longer.
Now, Stanley said this when Nvidia was at 390, and he called it nosebleed territory, which is just so crazy for him to say, right? That it was nosebleed territory. Now the stock's at almost $700, and that's 17% of his holdings. So, my thoughts on Nvidia are very simple. I actually started a podcast called Chip Chat with my boy Jose. We do that about every Wednesday from 6 to 7, and we talk about semiconductor stocks. He's been an Nvidia investor since 2018. So I've really got to pick his brain and learn about why Nvidia is the monopoly that it is. And it comes down to GPU demand is becoming excessive. So when Stanley Druckenmiller said, coders are becoming 7 to 8 times more productive, what he's talking about is essentially Copilot, right? When you're coding and you have this AI assistant that's helping you code, that AI assistant that is able to almost fill in your code for you to an extent or make your code better. You don't have to submit your code to a product manager and have it revised because the thing is already kind of product managing your code in and of itself. The computational effort that it takes for that Copilot to be meaningfully significant. By the way, GitHub's Copilot business is at a $156 million ARR right now, and Microsoft thinks that can get to $1 billion, right? So like at some level, that is one tiny use case in software programming for AI, and there's just a billion other use cases in the world. There's just a billion use cases. I mean, for content creators, there's a billion use cases. For healthcare, there's a billion use cases. This is with a bull case for Palantir. It's like there's a lot of use cases here. So if that's the case, it's just really, really hard to imagine that Nvidia can't go higher. Now, is Nvidia overvalued? I wouldn't say it's overvalued just on a pure PE basis. And when they report on 221, they're probably going to smash expectations. And that PE is going to go even lower than 50, 52 right now. I mean, you got, some of these other companies that have higher PEs than Nvidia that are not growing anywhere nearly as much. But given the macro that we're in right now, with unemployment having nowhere to go, but probably up, given it's at 50-year lows, having inflation having nowhere to go but down, which begs the question that if unemployment goes up while inflation goes down, what's going to happen to interest rates? It's a little bit of a weird conundrum that we're in. Could it be a little bit too many people chasing something that they're looking for is the only thing that's going to get them growth? And there's not enough real, clarity in terms of what Nvidia is going to be like. I think we're going to figure that out post earnings. Nvidia year to date is up 40%. I mean, it's 1 month into the year, and they haven't reported numbers. Now, all these other companies reported numbers, and their numbers are implying that AI growth is inevitable, right? Like that they are spending on AI. Like this is not a crypto bubble in 2021 where you're buying it because I'm buying it and then I'm selling it to you because you're buying it. This is no, people are spending money. People are laying off employees because they don't need that many employees because this AI thing is creating more productivity. And so, from a just regular bullish perspective, it doesn't make sense to sell Nvidia. It really doesn't make sense to imagine that there is a massive bear case outside of the fact that demand could slow down. And the thing is, we haven't seen demand slow down. So you can make a macro argument for why Nvidia goes down, but you can't make a real demand argument because demand hasn't slowed down. And if demand is there, then demand is going to continue to keep going up. Nvidia has pricing power. They won't be lowering prices anytime soon. That's a great point by Martin as well. That's something I forgot to mention. I mean, this is when you talk about pricing power, right? When you talk about a company that is able to control their prices. I mean, like think about Meta. Meta doesn't really have pricing power on advertising. Because I mean, let's just compare Meta and Nvidia real quick. Meta charges advertisers a CPM, a particular rate that they'll get that they will charge for 1,000 impressions on their advertisement. That is dependent on how many users are scrolling. It's dependent on how much content is being posted. And it's dependent on the cyclicality of the advertisers actually needing to get the consumer's attention in order to be able to pay Meta for those ad numbers. So Meta has to grow top-line users. Meta has to grow top-line engagement. Meta has to do all of these different things. They can't really have meaningful pricing power on their ads. It's dependent on all these different things. But one of the things they need to do to make sure those advertising rates actually increase is to make sure they have AI-enabled discovery engines or recommendation engines that actually propel the engagement I was just talking about in order to get users to use the product, to scroll through the feeds, to be able to click on the ads. Well, where do you get those AI recommendation engines? GPUs, H100s, Nvidia, right? Meta has to buy whatever the hell Nvidia has to give them. Tesla has to buy whatever the hell Nvidia will sell them. And then they can conduct their business. So when you think of Nvidia as this epicenter, this equator for where the rest of the world springs in the context of AI, it's just very obvious that they have the pricing power. If they want to increase prices, they probably can. And Meta and all these other companies are going to have nothing to do other than buy. It's just that simple. So if that's the case, then I think we're going to get some more. We're going to get some more momentum in Nvidia. Josh says, what companies are laying off people because of AI? I think it's not like specifically AI. I think the reason we're seeing layoffs is because a lot of companies are recognizing that these people aren't productive. So for example, when Google laid off 1,000 employees last week, those are middle managers, right? I would imagine Google's like, well, what is the point of these middle managers? These middle manager product management people, right? That are basically in Slack all day doing communication between the product people and then the engineers. If we can have some level of AI co-pilots make the engineers that much better that they don't need to communicate to a subsidiary in between their head boss to be able to affirm a change that needs to be approved on a new product update, like, why do we need this middle manager? Like, why are we paying them $200,000? And so it's not literally just AI. I think it's the overall like feeling that companies have. Like Spotify laid off 70% of their workforce. There's all these companies. Zuck's obviously got rid of 22% of the workforce last year. It's this idea that we don't need these people because there is productivity increases in the very fabric of all the other employees we have. Meta's revenue per employee almost doubled over the past year because they're going to be more productive via AI or AI in the business. Like if AI is making Meta's advertising better, they don't need that many employees to keep up with the advertisement systems to make sure they're good to go, because AI is quite frankly doing a lot of the heavy lifting in terms of making sure the advertising is good. That doesn't mean they're laying off their entire, advertising sector and all the engineers that optimize those ads, but they just might not need that many product managers in between. And so that's where I think, AI is just leading to massive levels of not really unemployment, but productivity gains, which leads as a byproduct of that to some unemployment. Okay, so that was on Meta. Let's talk about Tesla. We got 7 minutes left until the market open. Let's discuss Tesla and what happened with Tesla. So a new article came out last night. It came out actually right before I went live for the Palantir stream. And that article was from the Wall Street Journal that I do pay a $4 per month subscription to. And, I enjoy my Wall Street Journal subscription. I actually read the Wall Street Journal. I think there's a lot of unbiased commentary there. I think as you get older, you do want a broader source of financial news that is like really sophisticated. And the Wall Street Journal has a decent amount of that stuff when you're talking about pure economics. But they also have an opinionated column. And that opinionated column ends up putting out some junk. And last night, I think, was no exception to that. Here you go. This was their newest headline last night. I didn't read it. I ended up listening to the 25-minute version of the article. I will never get those 25 minutes back in my life. The money and drugs that tie Elon Musk to some Tesla directors. Board members have reaped hundreds of millions from stock awards and separate investments, even as some have done drugs with Musk. Former Tesla director Larry Ellison offered him a chance to dry out. Look, I mean, just I really tried listening to it because I was like, I got to listen to it to make sure there's nothing crazy there that's like worthwhile to share and like is meaningful for Tesla investors. And after those 25 minutes, I literally was just like, I can't give these 25 minutes back. I don't know what's happening with the mainstream media. Well, I kind of do know what's happening, but I mean, I think we are seeing a renaissance of destruction of someone's character because these businesses are so afraid of them not existing. Elon Musk buying Twitter destroyed the mainstream media's capability to form a narrative. And they'll still form a narrative, but it's just harder when the town square where all the most influential people in the world that are on, they're not on Instagram, they're not on TikTok, they're not on Facebook, they're not on Threads. YouTube is more content distribution, mass consumption. It's not really like an ecosystem where people are exchanging ideas and thoughts. It's freaking Twitter, now X. But you get my point. That is the platform. a billionaire, a multi-hundred billionaire owning it and now be basically letting the wild birds out and saying, you guys can say whatever the hell you want and not censoring. I think that really disrupted them. The point of the entire article was that Elon has done some drugs with board members of Tesla. And they have said this may be unhealthy behavior. And I'm just listening to this and maybe I'm naive as an investor, but I don't care. I really don't care, dude. If you told me Alex Karp and Peter Thiel were smoking a doobie, I would be like, damn, I wish I was there to have that discussion with them. I just don't know. Maybe I'm too naive, and maybe I should take it more seriously that Elon's doing LSD with Larry Ellison or whatever. But I just don't care. It's just not that big of a deal. Has it affected Tesla's stock price? No. What has affected Tesla's stock price is what's going on in the Red Sea. What has affected Tesla's stock price is interest rates. So it's not that easy to pay $1,100 a month for a Tesla when you used to pay $600-$700 a month. What has affected Tesla's business has been the inflation that we saw that's now coming down. Commodities have, lithium's down 80% year over year, but for the vast majority of 2022, that was a headwind for Tesla. There's a lot of things that have affected Tesla. I don't think the dude doing some drugs that may or may not be illegal is the worst thing in the world. And I definitely don't think it's the worst thing in the world if you're doing it with board members. Shit, that seems like a bonding experience to me. They were the integrity of the board to remain independent. What board member on a public company is independent? Please tell me. You think Mark Andreessen or Peter Thiel, when they were on Zuckerberg's board, both of them, I think, stepped down. I think Andreessen's still there, but Peter Thiel stepped down a year ago. Andreessen has one of the biggest venture capital firms on the planet. You don't think when he invests in a new company and they're, using Facebook ads, you don't think he's talking with Zucks a little bit on how to get them a really good deal so that they can grow because he needs a 50x exit to be able to justify him raising $5 billion? You don't think Peter Thiel influenced Zucks a little bit when it came to free speech in 2016? And the election and was saying, hey, we should really think about free speech or one of the biggest social networks. Peter Thiel is an Ayn Rand type of self-rational libertarian. You don't think he affected Zucks a little bit? The idea that board members need to be so independent, which is the Wall Street Journal's we have to have integrity in the board and they need to remain independent and all this stuff. And that's why Elon is doing such a horrible thing. It's I just don't know who reads it and takes it seriously. I genuinely am trying to be so objective here. That's why I listened to the damn article and I was trying to find the parts of the article that was yeah, that's bad. When Elon tweeted that stuff about Jewish people, that was bad, dude. You can be objective. It was perceived as anti-Semitic. He ended up apologizing for that. You can criticize the guy for some mistakes that he's made in saying that stuff. Elon's talking about illegal immigration all day in politics. As a Tesla shareholder, I understand if you're dude, I'm annoyed that you're talking about politics all day. Please stop worrying about this. I can understand your concern. But for you to be that upset that he's taken some drugs with a board member and it's just as a way to relax or get the edge off from running a multi-$100 billion company. I don't know, dude. I just think it's a little intense. You could be mad Elon bought Twitter and spent $44 billion, but to be mad that on a Friday night he's at a party and he takes some drugs with a board member and they're I just don't know. I don't know. I don't think it's that crazy. All the board members do alcohol. All the board members drank. It just doesn't seem like the biggest thing in the world to me. So nonetheless, that is the Wall Street Journal article on Elon Musk. And I think that I don't think it's the biggest deal. I'm curious to know your thoughts in the comments. Genuinely, do you think it's a big deal? I mean, let's make a poll about that. We got the market open in 1 minute. Let's make a poll about that real quick. I'm actually very curious because I don't want to seem like I'm on an island here, but it might be like I'm on an island. How many people actually think it's a big deal that let's say Elon did drugs with board members? Big deal. We don't know what types of drugs they are. Maybe they're illegal. Maybe they're not illegal. Who knows? Maybe it's weed and that's simple. Maybe it's LSD and that's more intense. Is it a big deal or not? I'm curious what people think. All right. We have got to the market opening up in 30 seconds. Thank you all for being with me here today. This is a very, very exciting market open. We have Palantir earnings at 3:30 p.m. live Eastern. I'll be here at 4 p.m. We get the results. We have some McDonald's earnings I want to talk about. We have Caterpillar earnings I want to talk about as well. Some other companies that release earnings after the bell. We'll go through those numbers and we'll see what happens. But today is going to be a very, very big day for the Palantir community and for the broader stock market writ large, because we'll see what happens. We got 83% say no, 17% say yes. Okay. Not too bad. Not too bad. And I think a lot of people might care, but maybe a lot of people are growing up to the fact that it's not that big of a deal. 9:30 a.m. Monday, February 5th. Thank you, everybody, for being here. The stock market is now open. Wake your asses up. Here we go. Amazon. Look at that red on Amazon. We got down 1% on Amazon. So we got a that was a lot of sell side pressure on Amazon. Okay, so Amazon comes in red for the day as we open up the market. Let's get to all these other stocks and see what we've got going on. Let's go to Meta. I am very curious on how Meta's doing. Meta's down about 1%. So Meta's at 470. It was at 485 last week at the top. Still up about 17% from the earnings pump it had on Wednesday. Meta right now at 470. Let's look at Tesla after this Wall Street Journal article came out. Tesla's down 1.84%. Now, Tesla did increase prices for the Model 3 to like 46,000 yesterday night. So that could be technically kind of bullish. The long range Model 3 is now $46,990, implying maybe their input costs are decreasing enough where they can, expand their margins, or demand is there so they don't have to worry about cutting prices. There's some reason for why this could technically be bearish in regards to how they're pricing the car. But overall, it's a good thing to at least see that they're raising some prices in the United States, given they cut so much in Germany and they cut so much in China. 183 right now, down about 2.2% on Tesla. Apple's actually up about 1% on the day. Bitcoin, 43,317. That's about 2% for the day. Let's go to the Mag 7 right now. So right-hand side of my screen, or left-hand side, you see Apple's up, Microsoft's down, Meta's down. Google is actually up 1.14%. Google had a terrible earnings last week, but they are up. And not terrible because the earnings was terrible. I think the earnings call was just bad, but the numbers were actually okay. Nvidia's up 2.5%, Tesla's down 2.3%, and Amazon's down 1.0%. So Nvidia, I think, is the story of the morning, up about 2.8%, $680. They will have earnings on 2/21. So we got about 2 weeks until their earnings to see if they can continue this multiple. It'll be very interesting to see where Nvidia ends up right before their earnings, because if they're at 680 before earnings, they can make a run to 730, 740 if they have a good earnings. But if they fall back down to 500, which I don't think that's going to happen before earnings, but if that does, it's going to be really interesting to see how the market decides to price them. Let's go to Palantir. Palantir was up 3% in the pre-markets. Palantir, look at that. 3.76% up on the day. We hit a high of 1778. Obviously, there is probably some earnings excitement from the broader market. Palantir now 4% on the day. That might be a good thing going into earnings because it means there's a lot of momentum. It might be a bad thing because it's already running up so much that we have a sell-off towards earnings. I have no idea. The only thing I think I can meaningfully say is if guidance comes in at that 20 to 23% range, I don't know if the stock's going to do well, but I think the stock has the potential to do well. If we don't get that guidance in that range, the stock might have a little bit of a hard time. So that's the core number that I'm looking for. Palantir's up 4%. Not bad at all to see Palantir up for the day. Let's go to Enphase real quick. Let's see Enphase 97.24. Enphase down 4%. Look, Enphase has earnings this week as well. Let me actually pull up the picture of all the companies that have earnings this week so we can look at that together, and I'll talk about which companies I really care about. Obviously, you guys know the big one that I care about today, Palantir. But Enphase earnings, I don't think are going to go that well. And the reason I don't think it's going to go that well is because of, what JPOW said yesterday. Rates are not getting cut in March. And so that's why you see the decline on Enphase right now. And quite frankly, the decline on Tesla. I forgot to mention that's probably another reason why Tesla's down today. If rates aren't coming down anytime soon, solar panels are not going to be financed on a residential level, which is the majority of Enphase's business, anytime soon. They already guided for $300 million of revenue. They're probably going to decrease that guide, I would say, for the rest of the year. If they slightly increase it, I don't think that's enough for the street to get excited. Enphase was a company that was doing $700 to $800 million of revenue a quarter. They're now going to do $300 million. Not good. Not good at all for Enphase. I mean, it's just really not that good for Enphase. SMCI is up 5%. You've got to be kidding me, dude. Oh my goodness, you got to be kidding me. It was down in the pre-markets. I didn't look at SMCI because it was down. I was like, okay, SMCI is taking a break. It's just chilling out right now. It's just relaxing. It's not going to be running with Nvidia. Nvidia is its own monster. SMCI is a hardware business that has hardware margins, not software margins. It's already up 105% year to date. It's going to chillax. That's what I saw when I was at the gym in the pre-markets. I was like, you know what? It'll be okay. Apparently not. It's up 5%. $600. SMCI is up 4%. Could you explain why this is happening? I don't know. Maybe it's the Nvidia pump, but there's no headline that's out there. There's no catalyst for why it's up. But it is up right now. Market cap of $33 billion. They guided to do about $15 billion in revenue. So the market cap is basically half or just only double of what they're going to be doing in revenue. I think SMCI is one of the scariest stocks in the market right now. I really think it's one of the scariest stocks in the market. And for those that have a good average on SMCI, I applaud you. And I also say, I don't think it's the craziest thing in the world to think of taking some profits. You know what SMCI is reminding me of? And look, I'm probably going to eat my words when I end up being wrong about this, but that's okay because I feel like it's still worth saying it. SMCI reminds me of Zoom. And the reason SMCI reminds me of Zoom is because you see this run from Zoom from 59 to 588. I mean, SMCI literally has gone from like 70 to 600. So it's almost identical from that. And then look at how Zoom's come down. Now, you may say, Amit, Zoom's not an AI play, even though Kathy Wood thinks it's an AI play, but it's not, creating the hardware infrastructure, the designing of the chips in order for the chips, like it's not integrated into the semiconductor. I get it. I get it that. But SMCI, if they have any inventory shortages, any demand problem in the context of overall net GPU capacity, which, yes, you can argue that there's not going to be a demand problem, but if there is a slight decrease of demand in any quarter, this is not a business that is doing 80% gross margins, 70% gross margins like Nvidia. This is a business that's doing 15% margins. And yes, the valuation is still pretty attractive. PE of 29, growing triple digits year over year. It's not like it's not an attractive valuation. It's just a question if there's anything that happens in regards to their overall business, the thing can come floating down. Remember, it went up to 300 and then it came back down to like 190, 200-ish in 2023 before it made its next bull run. It's just one of those things to be a little curious of. I definitely wouldn't initiate a position here because you're buying at quite literally all-time highs. And I think it's a little scary to mess with it. Sometimes you got to just let these things run. And if you miss it, you miss it. Same thing with Nvidia, in my opinion, right now, even though Nvidia is a much better buy than SMCI. But that is one of those stocks that I would be a little curious of, or a little cautious of in the context of the semiconductor space. Okay, Nvidia, where's Nvidia is at? Oh my goodness, Nvidia hit 690. Oh my goodness, Nvidia hit 690. This is just insane. Oh, by the way, SMCI is also one of the most heavily shorted stocks on Wall Street. You really got to remember that. And people forget that. SMCI is one of the most short. I think it's like a 26% short float. Someone can correct me in the chat if I'm wrong on that. But the shorts, when they see any sign of weakness, they will attack it like piranhas and it will come down, if there's an issue. Right now, the shorts are getting hurt. I don't think the shorts are getting squeezed. I think they're getting hurt. And maybe they do get squeezed. But it's one of those things to just be cautious of. Nvidia's up 4%. Nvidia touched 692. I just want Nvidia to get to 700 at this point because why not? Like at this point, it'll be fun if Nvidia gets to 700. Like I don't have a dog in this race. Hopefully that helps Palantir's demand if Nvidia goes up. But at this point, I just want Nvidia shareholders to do well. I mean, like there's nothing more you can say here. Palantir earnings will be released at 4 p.m. 4 p.m. for those that are asking. So we'll be live 3:30, and then 4 p.m. we'll have Palantir earnings. Nvidia was at 170, now it's at 700. Yeah, it was at 170, now it's at 700. Put in the chat if you own Nvidia. Put in the chat. You deserve to gloat a little bit if you own Nvidia. You deserve it. I mean, like, there's some things in life you're not supposed to gloat over. Buying Nvidia anywhere below 200, you gotta gloat. You gotta gloat over that. Here are the earnings we're gonna expect this week. Okay, so today we have Palantir, McDonald's. I'll talk about their earnings in a second. McDonald's earnings. I mean, the stock is down. It wasn't that exciting. But they did have earnings. Oh, we got some breaking news real quick. Speaking of earnings this week, Snapchat has earnings tomorrow. Snapchat today, 10% of employees are out. We were talking about layoffs like 20 minutes ago. 500 employees are gone at Snapchat. The stock, I mean, I think I'm going to guess the stock's up 3% right now. Okay, the stock's down 2%. I don't know why that's happening, but that was a hit and miss. But the stock is so 10% of employees down 500 employees. Look, this makes a lot of sense. The company expects it will incur charges ranging from 55 to 75 million. That's probably going to be all the severance and stuff. Their last cut was August 2022, laid off 20% of staff. The reason they're doing, okay, so this can either be bullish or bearish tomorrow. The reason they're doing this is because they might be doing it to save their asses if earnings come in bad. And they're like, hey, well, we're doing cost cutting. Like every company, when earnings sucks, they're like, well, cost cutting. So, you got to give us some credit there. Or it's bullish because they're going to beat on all their top line numbers and they're getting even more leaner and efficient, which Snapchat, I mean, how many employees does Snapchat have right now? I'll tell you the number right now. The employee Snapchat has is 5,288 employees. The company is worth $30 billion. I guess that's reasonable. 5,000 employees for a $30 billion company. I would say that's reasonable, but Snapchat's not profitable. Snapchat stock-based compensation is ridiculous. Snapchat basically has given an FU to shareholders with their F-class shares. They're not like Alex Karp's F-class shares. They're much more, actually FU. So to me, does it need to have 5,000 employees for a tech company? Probably not, even though it's worth $30 billion. And it's probably a move that they need to make. AI is probably affecting it. Overall, employees that aren't doing much in the company affecting it in terms of, mid-level project managers and stuff like that. But that is one of those headlines we just got in 5 minutes ago on Snapchat. Okay, so we got Snapchat, we got Eli Lilly. That's going to be important. I mean, Eli Lilly's stock tomorrow. That stock is one of the best pharmaceutical stocks year to date. It's up 18%. The past 3 months, it's up 19%. Over the past year, Eli Lilly is up 107%. Put in the chat as well if you own Eli Lilly, because I think that's been a sleeper that a lot of people haven't looked to. I mean, that's not a Pfizer, Moderna that need vaccines to be able to do well. Eli Lilly is actually innovating when it comes to drugs. So Eli Lilly is going to be really important. Chipotle, Spotify. Spotify is going to be important because they gave Joe Rogan $250 million and they're not forcing him to be exclusive anymore. And so I understand why they're doing this, because ultimately they're like, look, if you were going to subscribe to Spotify, you've already done it. There's no way we're going to get more additional people subscribing to Spotify just by having something exclusive. So we'd rather get more distribution on Joe Rogan's podcast and collect the advertising revenue, to make up for the loss in exclusivity. The problem with that model to me is that what makes you different from Sirius XM? And why do you deserve a massive tech multiple, right? When it comes to Spotify, because SiriusXM paid Howard Stern like $500 million and they collect ad revenue on top of that $500 million. They want to make $1 billion off of that $500 million. Well, Spotify, I mean, 95% of your revenue goes to record labels. You barely make a profit. And now you're telling me you don't even have these exclusive podcasters. You're trying to get advertising revenue. Like, you just become a media company at that point. You're not that exciting to me, even though their user growth is absurd. They're probably going to add like 30 million new users, getting close to that 650 million user mark because Spotify just, it's a phenomenal product. But I don't know. It's going to be really interesting to see Daniel Ek try to justify that argument, because I'm sure he's going to get asked about that. Then we got Enphase, PayPal, Roblox, Uber on Wednesday. PayPal is my big one. I'm going to be very excited for that. I have a $10,000 position there. Hopefully that 10,000 is not dead money as it's been for the past couple of months. On Thursday, we have Affirm. Affirm's been kind of in a little bit of a bubble. People have argued in the fintech space, even though they have performed really well. So we'll see what they're doing. They were up 5x last year, 500% on Affirm. So we'll see how their numbers are. Warner Music Group, Cloudflare, Bill.com, Pinterest, Hershey's will be very interesting. Cacao prices have gone to the moon based on a variety of things that are going on in West Africa. So making sure that Hershey's has a plan to be able to reasonably get those cacao prices to go down in order to make sure their input costs eventually go down so that they can, grow top line their business without having to charge exuberant amounts of money for Hershey's products will be very important. So that'll be something that I want to take into account as well. A lot of people said Hershey's is dead because of Mr. Beast. Those people don't know what the hell they're talking about. Mr. Beast is not putting a dent into Hershey's. It's because of the input costs on commodities, not because of Mr. Beast. And the reason I say this is because I tried the chocolate. It's not good. It's really not good. So it's one of those things where I think it's more commodities versus Mr. Beast. Okay, McDonald's earnings, $6.41 billion versus $6.45 billion. So they missed on revenue. They beat on EPS. The reason the stock is down, which let's see if it's down currently. Yeah, the reason the stock is down 3% is because they're struggling with some of the stuff that's going on in the Middle East. So they said the conflict in the Middle East are hitting sales in the region. Now, look, is this a cop-out by Microsoft to say that the Middle East is the reason why they had a shitty earnings? Maybe, but there's also probably something to the Houthis and the Red Sea causing the catastrophe that's happening right now for McDonald's. They said the company's monitoring the evolving situation, which expects to continue to have a negative impact on system-wide sales and revenue as long as the war continues. The US and the UK have launched airstrikes. It seems like I'm doing a lot of research on it, so I want to do more research before I really talk in depth on it. But it seems like we're basically in another little bit of a war in the Middle East. And this Israel-Hamas situation has escalated to the point where now the Houthis are not, stopping in terms of their mission to be able to elevate the Palestinian cause. That's causing a lot of problems with supply chains. And obviously the United States needs to keep the economy going up. We cannot have inflation continue. The Red Sea stuff is very bad for supply chain bottlenecks and overall headline inflation. Even if it's not taking effect right now, in a couple months, it could take effect. And you don't want those lagging effects, especially when we're getting closer to a rate cut in March or in May or June. So that is, part of the issue we have right now. Is it affecting McDonald's? Probably. Is it affecting them that vastly? Maybe not. But that is one of the reasons McDonald's missed. Now, they only missed slightly. So they're down 3%. They barely missed on revenue. So I would expect that not to be a big issue unless this it can escalate further and further. All right, we got Steve Eisman on CNBC today, the big short investor, the guy that predicted the entire banking collapse in 2008. Always interesting to hear what he has to say. Let's see what Steve Eisman has to say on the state of the American economy and if banks are in a crisis. We know JPOW, if you're just tuning in last night, he said he does not see the banking crisis that we're currently having, which it's not even a crisis, but we had New York Community Bank fall 35% last week, as a 2008-like scenario. He thinks some regional banks will shut down, but the far majority of banking and the banking infrastructure will be okay. Here's Steve Eisman talking about it in depth.
Talk about the markets and the Fed. Steve Eisman, Senior Portfolio Manager at Neuberger Berman. Since the last time you were on, Steve, and welcome. It's good to see you. We have seen surprising strength across the board, it seems like. And I wonder whether you can just give us your view, just flying at 30,000 feet, what exactly is happening in the economy? Is it organic? Is it illusory for
I think the answer to your question is no one freaking knows. And everybody who comes on the show doesn't know. Right. And every economist whom I respect are saying there's about to be a recession because the Fed raises rates, but then they'll admit there isn't a single data point that's pointing to that happening. I don't know. All I can say is that 70% of the U.S. economy is consumer driven. The consumer seems to be pretty strong. They still have savings. They're spending money. So, why everybody's getting so hysterical, I don't get it. Everybody should just wait. When there'll be a negative data point, we could talk about it. Until then, it seems to me the economy is just fine.
I've seen, and just looking for all the people that were expecting this not to happen, there's a lot of excuses for why it's happening. I've heard a lot of the jobs created are temporary jobs or second jobs. I've heard. I've heard that there's a lot of government jobs.
Listen, in my business, when you're wrong, you're wrong.
Yeah.
But you see that on a screen. Economists can pretend till they're dead that eventually they'll be right. Like the people who say that for 40 years the deficit's going to crush us. They've been arguing it for 40 years. Maybe it will, but 40 years is a long time. So all I know is that the data is fine. Credit quality in the banks. Capital One, the CEO of Capital One got on and said he thinks delinquencies are actually going to start to go down in the second half of this year. So until somebody can give me an actual data point that says that things are bad,
is it possible any of it is Keynesian largesse?
It certainly is. It's certainly possible. But you don't see the government stop spending, do you? I mean,
no.
The $1.2 trillion
so we can count on that. But
that I have spoken on is just starting.
That all makes me think we're going to be back to MMT works. So why not do it?
That's way above my pay grade.
You know what I mean, though.
I know what you're saying, but I don't have an answer for that.
Yeah, it's a free lunch. Is there anything organic, anything good happening? And productivity seems to be better. Organically, I mean good. A lot of good things happening. But is it organically good because of productivity rising for something that economists miss? Everybody missed it.
Honestly, I don't know. I just know the data's fine.
I love Steve Eisman because this guy is really incredible. I've been watching him for a couple of months now, and he's like, he goes on these shows and they ask him like, so what's going to happen in the economy? And he's like, I don't know. And I don't know why you guys spend all day thinking about it or asking about it or even caring about it. And they're like, well, this is our job. And he's like, and basically he doesn't say this is a shitty job, but he just looks at them. He's like, this is a shitty job. Like you're just trying to predict something that no one can predict. But the reason they ask him is because this guy figured out 2008 there was a bubble, and he made, I think Steve Eisman made a couple billion on it. Now, personally, he didn't net a couple billion personally, but I think for his fund, he made a few billion on this. So if anyone would know, it's Steve Eisman. And the problem is he never wants to really share because he doesn't actually know. But in some moments, maybe he does know. SMCI, goodness gracious, is now up 6% on the day. I don't know, dude. I don't want to say it's a bubble, but I do feel like if I had some gum, maybe that gum would be popping when I blow it because it would be from a company that sells bubble gum. So I don't want to say it's a bubble, but if I had some gum, it would feel like I was chewing some bubble gum. And SMCI right now up 5.8%, $613. I mean, I don't know what the catalyst is. Like, I'm going to Google SMCI right now if there's any news, if there's anything, any headline that came out today. No, there's nothing. There's just a bunch of think pieces saying that SMCI is going to go to the moon. That's it. There's nothing out there. I would have seen some news Nvidia, there's no news on Nvidia either. They didn't raise guidance, nothing happened. Yeah, there's just a bunch of think pieces from Reuters and Yahoo Finance saying is Nvidia the next multi-trillion-dollar company. Like there's nothing. There's just the market that wants exposure to AI, I guess. That's it. That's what's happening. Palantir is dropping right now. Okay, so Palantir is declining. Where's Palantir? Palantir 1714, so still green on the day, but it is down. I think this is a lot of trading we're seeing in the algorithms, guys, before earnings. I don't think this is anything like oh my God, there's been 21 million shares traded already for Palantir. That is not normal. We do 60 million a day. So for us to do 33% of what we do in a day in 20 minutes, yeah, this is definitely high level trading algorithms or maybe some institutional funds that are just playing around with Palantir. I mean, look, if you wrote Palantir from 1702 to 1750 at the top of this morning, that's 48 cents of profit on top of millions of dollars. You could be making a hefty profit. So it seemed, and now you might be selling it off. So it might seem like there's a little bit more of that going on versus like someone knows something about what's happening with Palantir. Crossroads says SMCI is speculative movement coming in. That's exactly how I would say it. Speaking of Crossroads in the chat, let me do one quick shout out real quick. So me and Crossroads did a really, really fun interview over the weekend. We talked about Robinhood, PayPal, SoFi. I think everyone should check out that interview. It is live on my channel. If you don't want to check out the full interview, I'm posting clips of that interview on this channel. It's my second YouTube channel called Macro Darts. We discuss macroeconomy, stocks, the market, all that stuff. I've got a thumbnail guy working with me. So I think these thumbnails, if you subscribe to it, will actually be very pleasant in your feed. Like it's really high quality thumbnails. Your feed, even if you don't click on the videos, you'll like seeing the thumbnails every day. So if you don't want to watch the entire interview, you can subscribe to this channel and get bits and pieces of the interview that are, hyper concentrated. So you only get to see the parts that you want to see. And if you actually do want to see the full interview, I will put it in the chat as well. The full interview is here. People say Crossroads. His name is Roy. Looks like Alex Chris. They thought I was interviewing the PayPal CEO. I mean, quite frankly, it's probably his twin, and Crossroads is just being humble about it. But if you guys want to check that out, then that is there. Tino says 20,000 Palantir stocks. Give me $100 today. Tino, I don't think we get $100 today. Let me know your average though, because with 20,000 shares of Palantir, if you've got a decent average, then hopefully even a slight gain up gives you some gains. Yeah, big tech is selling off a little bit. Google's green, Nvidia's green, and Apple's green. Very interesting. The market's giving Google, Nvidia, and Apple some green. Meta's falling, which was expected. Meta at 462. Now remember, Meta was at 394 last week. So anything above 420 to me is just incredible for Meta. So the fact that it's still sustaining 460 is great. The thing about Meta selling off long term is I don't know what you do with your capital if you sell Meta. They're giving you a dividend to stay. They're telling you they're not stopping their growth. And the headset space is only getting bigger and bigger and bigger. That's like a call option on Meta. If it works out, it works. The core advertising business is not getting disrupted by LLMs. If anything, AI is making their advertising business better because they don't, people aren't searching on Facebook. They are interacting on Facebook. Google, the market's so afraid that people stop searching. For some reason, the market thinks that people will just stop searching. So that's why people are afraid. But Meta doesn't have to deal with any of that. So if you sell Meta, I'm really curious, where do you put your money? Where do you put your money if you get rid of Meta, especially if you have a nice margin of safety? If you have anything under a 250 average, I don't know what's the reason to sell Meta. Even if Meta goes down to 350, what's the reason to sell? Outside of just taking profits, I don't know where the money gets allocated. SMCI is now up 7%. Well, why not? Of course it's up 7%. $618 on SMCI. Why not? It's just SMCI's world and we're living in it. That's it. Where's Nvidia? Is Nvidia up 3%? Nvidia's up 4%. Okay, so Nvidia is basically at 690. Dude, I don't know. I'm going to try to, what is the short interest on SMCI? I want to get the actual number. Short interest SMCI. So it's 9%. So as of February 2nd, it was 9%. That's actually lower than I thought it was. It's still one of the highest shorted stocks on the street, but it's not as low as I thought. Or it's not as high as I thought. I thought it was closer to 20%. Oh no, now hold on. This website is telling me it's 18%. Oh no, sorry. That was a percentage change. It is definitely 9%. Yeah, 9 to 10%. That's where it's at. Okay, so 9 to 10% of SMCI is sold short. SMCI now it's $620. Are the shorts getting squeezed? Are the shorts that scared that this thing's gonna pop to 1,000 and they're gonna be wiped out completely, and so they're covering? I mean, it's up 7% in a day, dude. Like, what else is the justification? How else could this be going up? The volume on this stock is 2 million. Dude, it's up 7% on 2 million shares traded. Palantir is up 0.65% on 22 million shares traded. There is so much buy side pressure. What is their float, by the way? How many shares? Because that's another reason this thing could be pumping. Their float, oh, yeah, that'll do it. That'll do it. These guys have 53 million shares outstanding. 10% is short. So 5.3 million shares are short out of 53 million outstanding. Obviously, Palantir has 2 billion shares. So to get that, that's why when people say, oh, Palantir is going to go to 30, it's like, dude, there's a lot of buying pressure that has to happen for those 2 billion shares to get to $30. Like a lot of buying pressure. For SMCI, yeah, I could see why this is happening. You only got 50 million shares available. That's the beauty of a market. Now it's up almost 8%, 6 to 8. We're just looking, as I talk about it, it just goes higher. I should be an SMCI investor because as I speak about it, it just keeps going higher. When you got 10% sold short and you only have 50 million shares, that'll do it. I mean, shit, that might be a little bit of a squeeze we're seeing, guys. That might be a little bit of a squeeze. Enphase is now down 7%. Yeah, Enphase is no SMCI. Enphase is a solar microinverter company that if you invested in, you are down big because you didn't know where rates were going. Anyone can say, oh, well, I'm buying Enphase for the long term. No, you're not, dude. You have to buy Enphase for the long term. That's the difference. That was like me when, like, hey, look, I make fun of myself as well, right? When Palantir was $6, I was like, well, I'm investing in, the nature of the modern operating system for the long term. It's like, no. You have to invest for the long term for this modern operating ontological nonsense. Like you have to now. And thankfully, the stock has gone up since then. But if you're an Enphase, you better believe in solar for the long term because those short-term rates, there's nothing to be excited about on that. I mean, if you bought Enphase, you did not have a thorough analysis of where rates were going. You just didn't. It's just that simple. And now you got to hold it for a long time until rates come down. So Enphase is in a tough situation, dude. It fell to 72 and it went back up to 140 or 114 within a month. But it's tough. If JPOW says rates aren't coming down, rates aren't coming down. SMCI now 7%. Juki says SMCI versus Enphase in 5 years, Enphase wins 1,000%. I don't know, dude. I mean, look, SMCI might be in a little bit of a bubble, but in 5 years, I don't think GPU or chip demand is going anywhere. Like that's why, again, the guys, you should definitely subscribe to Macro Darts because I have a clip coming out from the podcast where for 8 minutes, I'll put it in the channel in the chat again. Me and Jose, we talked about SMCI itself. So for those 8 minutes, if you just want to learn a lot more about SMCI from an expert from who knows the chip market, this is why you want to subscribe to the channel because those clips will be there. Because sometimes it's hard to go to the original podcast and like look in the 40 minutes to find the clip. So that channel will have all the clips. But what he was telling me is that if there is any level of inventory shortage, SMCI takes a dump. But long term, when I asked him, what do you think about SMCI? His argument is like, yeah, it's not Nvidia. But if Nvidia is going to be around, SMCI is not going anywhere. AMD is not going anywhere. SMCI creates the hardware packaging, which is why they have hardware margins, not software margins, for the Nvidia chips. And there's kind of like a duopoly. I mean, it's SMCI and a couple of other players, but that's it. So, yeah, I don't know if Enphase outperforms SMCI. I don't know if people care that much about solar in 5 years, dude. I really don't. I don't know if people care that much about solar in 5 years. Like in 100 years, yeah, solar is going to win. In 5 years? With our economy the way that it is, do I think people really give a shit about upgrading to solar as much as they need to? Maybe, maybe not. And maybe enough to perform well, but maybe not enough to beat one of the leading AI, hardware manufacturers. SoFi 759, down 3.74%. What's going on with SoFi? Well, the market hates SoFi. There's another reason you should subscribe to that channel because me and Roy, we talked all about SoFi. That clip will be coming out today, a good 13 minutes on why the hell the market hates SoFi. Look, a couple things on SoFi. They released the report the day and the day after JPOW says he's not going to cut rates, and then we get one of the hottest job reports we've seen in the past, like really 22 months. And so as a result of that, that is not necessarily the best for a company like SoFi that is hoping for interest rates to come down. The other thing around SoFi that I think is important for people to understand is SoFi has guided till 2026 to be GAAP profitable, but they haven't increased their EPS estimate for full year 2024. It's basically going to be flat, which means they're not going to grow net income at all. Now, are they sandbagging? Like, yes, they are literally taking the sand, they're going to a bag, and they're putting the sand inside of the bag, and they're selling the sand in the bag on the street. That's what they're doing. But you can't blame analysts for downgrading the stock if they don't really know, where the stock's going to go. I mean, a sandbag is a sandbag, but an analyst can't make a decision based on a sandbag. So that is one of the reasons why SoFi is down. 90% of the market is red. SoFi is one of them. I agree. Let's take a look at fintech as well. But the other reason is because those EPS estimates are not good for 2024, and analysts, have recognized that they're going to need to see some more growth for that to happen. So fintech's red. PayPal's down 1%. Robinhood's down 2.34% of the day. SoFi's down 4%. Coinbase down 4.77%. Square down 2.48%. Let's look at crypto. So all of crypto's red. MicroStrategy reports tomorrow. That's another interesting earnings we're going to look at. Bitcoin's green. CleanSpark's under 8. Coinbase is down 5%. Cypher's down 5%. Marathon's down 5%. The Bitcoin mining trade has definitely lost some enthusiasm. But if Bitcoin gets to all-time highs, which maybe it does this year, maybe it doesn't, who knows? I think these miners will perform very well. But, if they don't, then obviously it won't. So we'll see what happens with Bitcoin. Right now at 43,000, it's done well going above that $38,000 range. Some people I've talked to think that crypto is in a bubble and Bitcoin's going to collapse back down to 30,000 and then it will get to all-time highs. So they're bullish, but they need a little bit of a flushing of the system. I don't know if they're right. I don't know if they're wrong. I don't know if the crypto is just going to be flat or if it's going to tread along. Obviously, that halving event that's coming up is going to be exciting for Bitcoin. But until then, there's really, nothing we can expect from the crypto stocks to perform really well. Palantir is now under 17. Okay, let's go to Palantir. Roy says bank stocks are getting hit right now. And so SoFi is a bank. That's true. So we'll see some banks go down. Let's actually look to financials real quick before we go to Palantir. Where's our financials? Where are these? Oh, banks. Here we go. So banks are, look at that red. The only bank that's up is a regional, Zions. Look at that across the board. And the reason for this, if anyone's confused why they're down, is because JPOW said no rate cuts in March. So again, banks are going to always react like this when there's no rate cuts. Those rate cuts are incredibly important, but I don't think it matters that much because we're going to get those rate cuts eventually and then it'll be okay. All right, so let's go to Palantir. Let's go to SaaS companies and see how Palantir is doing in compared to other SaaS. Yeah, it's pretty much all red. Adobe's red, CrowdStrike's red, Intuit's red, Twilio's red. Palantir is now 1693. That's red. Datadog's red. Snowflake's red. Snowflake, by the way, is at 213. Snowflake's at $70 billion market cap, so it broke out last week. I don't know how sustainable that is, but it's there. Zscaler is red. Twilio's red. The only greens are Mongo, Oracle, and that's it. Everything else is red for the day. Everything else is red. Okay, market's dumping and Nvidia's up 4%. It's crazy. It is absolutely insane. Let's take a final look at Nvidia and SMCI before we head out. Nvidia's at 692. It hit 694. Goodness gracious. SMCI is at 7.8%, up 624. SMH, for those that don't know, this is an ETF that is long semiconductors. That is up 194. Year to date, SMH right now, I'll tell you, I think it's 15%. Year to date, 12.75. So, I mean, look, to be up 12.75% is just in 1 month on an ETF is incredible. SPY, how's the S&P doing today? S&P 492, so that's barely down. S&P holding up very well. And then the NASDAQ, the Qs, 15,577. That's not too bad. And then the Qs are 427. Yeah, so the indices are barely down. Obviously, because some of these big tech companies are doing well, but some of these individual stocks are not doing the best. All right, Palantir 1688. S&P is at 492. We will see what happens today on earnings when it comes to Palantir at 3:30 p.m. It's going to be exciting. It's going to be very, very, very exciting. So I'll be live today, 3:30 p.m. For Palantir. Let's do word of the day, and then we'll end out the stream. Thank you all for joining here today. We're not done. We got a big stream today, 3:30 p.m. The trajectory of Palantir's full year 2024. Can we please get $2.7 billion in revenue next year? If we can, I think the stock's going to do very well. And I think the market's going to respect it. And if they don't, that's a buy the dip opportunity. So that's the number I'm looking for, 21% year-over-year growth. If we see it, it's going to be pretty exciting. Google's trying to run while the whole market's red. Yeah, well, Google got hit pretty badly. So Google's trying to make up for a little bit. Okay, word of the day. Orotund. Characterized by strength, fullness, richness, and clearness. Orotund. The opera singer's orotund vocals soared through the air, enveloping the concert hall in a wave of rich and sonorous melody. The actor's orotund voice. Okay, so this is about your voice sounding good. So you guys know I have to use this word in the context of my voice. I have to make a joke here. Like, there's just no way I can leave the stream without saying my orotund is hopefully attractive enough to everyone that's here and that tunes into the stream. that was not even a good use of the word, but that's cool. Orotund. So, okay. So whenever you want to compliment someone's voice, dude, if you're on a date with a girl and she has a pretty voice, just be like, your orotund is fantastic because your aura is fantastic. So you can kind of amalgamate the words aura and orotund, and maybe she doesn't know what both of them mean. And then you can say, well, you're very esoteric as well. And then you can start saying she's mysterious because she doesn't know these words. Like, you could really develop some chemistry there. Even if you took physics in high school, I think there would be meaningful chemistry with that girl if you did it that way. All right, that's it for me. Thank you everybody for being here. We are done for today. Should have used Carp's voice for earnings call today. Yeah, pretty much. Palantir just gave up their gains. That's okay for me. Palantir will be okay. Hopefully, as long as guidance is good, we'll see what happens there. And then we'll keep going. So again, we don't have to like red hots to be frank about the fact that guidance is going to matter. And if guidance ultimately gets us to that 22 to 23% range, then we're going to do well. If guidance is below 20%, the stock is going to tank. It is that simple, not being delusional about it, black or white. Guidance is good, we go up. Guidance is bad, we go down. And we have to be very frank about that. I'm sure you guys caught the red hot Frank joke. I thought of that at the gym this morning, and I was like, I'm going to use this at the stream. I was in the sauna. I was burning up. It was actually very hot. We're talking about hot sauce. And I was like, this is the joke. This is what we're going to do. Thank you, everybody. Appreciate it. I will see you guys at 3:30 p.m. Eastern. No matter where you are today, tune in 3:30 p.m. Eastern to 5:30. Try to clear out your schedule. If not, you can catch the stream afterwards. And let's discuss what's happening in the world of Palantir. Thank you, everybody. I appreciate it. And I'll see you in about 4 hours. Bye, everyone. Have a good one.